Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, January the 9th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we are here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. It is a little bit light on the economic data front. Not even really a whole lot to see across the pond. Canadian housing starts did come in better than expected. But back here into the United States, we got a couple of other things. Canada also left their overnight interest rate unchanged at 1.75. That's another one. But one thing we've been looking forward to is the crude oil inventories, and that came out at a drawdown of 1.7 million barrels. Now, we've been seeing these massive builds lately. Well, this is a drawdown, but it is less of a drawdown than expected. And we have oil, which was really preemptively rallying ahead of this number into the 50s. We're still in the 50s, but we're starting to lose a little bit of that momentum because of that drawdown being less than expected. So that means there's more supply out there than what was being expected. And we also have Rosengreen speaking later on today, and a couple of other Fed governors have been talking recently, and they're starting to talk a little bit more dovish, where it means that they're kind of thinking maybe if we continue to increase these interest rates, we're going to send the U.S. into recession, which is what I've been talking about for, I don't know, about 4 or 5 months now, that it's time to stop raising interest rates because markets are signaling they need to. They're always late to the punch, though. That being said, let's move on to the overall markets. I talked about crude oil being higher by, $1 almost. It was up in solidly into the 50s, getting back into this little area, which is where I thought we would get this bit of a bounce, get into this area. Right now, it's like, we're trying to push through that. Remember, I talked about this $50 a barrel area being a psychological support and resistance area. It will act like that. It's acted at it like it several times before. It's going to continue to do that now. Bulls, very happy to get it into that 50 handle. They're going to try and fight to keep it. It's in that handle in order, to get that settlement, obviously. Gold, it's moving higher today. Again, the levers and pulleys here, this isn't really helping my GDX trade, but gold kind of bucking my thesis on once the equities start rallying, we're going to lose some momentum in the gold. It's lost a little momentum, but just not nearly enough. Bonds, finding a little bit of a bottom today. Yesterday really accelerated to downside with a couple of Fed governors. I can't remember who it was specifically that basically was talking about the recession and increasing interest rates, and that the Fed is actually starting to listen. The rest of the Fed governors are starting to listen to them. Really accelerated bonds to the downside. This, excuse me, this right now is really probably some profit taking going on. I think that we're going to continue to move back down to where the point of control is with the bonds. All right, VIX actually kind of making this chart look like the VIX is trying to create a bottom here, which doesn't usually happen, where you look at the VIX and really look at it for future moves. I don't know that the VIX actually really follows that rule so much. But today, as you can see, with this big sell-off, the VIX making this spike and then settling down here, any type of settlement here or below is still going to look very bullish as if you were reading a chart. I don't know if it's really going to necessarily follow through with a chart setup. All right, now the Dow Jones Industrial Average, nice big rally this morning, up 80 points right now, but you can see it feels like this is really slowing down on some momentum. Now, I don't think that we're going to go down and test these lows necessarily, but I could easily see us come back down and test some of these Fibonacci's, or maybe even this little area here. Because it seems like the volumes are lightening up. The market's really kind of melding a little bit. and waiting for some shoe to drop. I don't know what direction this is going to pop, but to me it feels like it's ready to make another big move one way or the other. I mean, I would believe, my thesis is that it's going to go up and test this point of control, but and maybe that's the pop. That's the way I'm leaning towards, is to the upside. But it doesn't mean that we can't get that pop to the downside. So having said that, I haven't picked any directional moves because we're just not getting any solid indications as to this not being a dead cat bounce or lower lows and lower highs in a bearish trend, right? So this could just be another lower high. I'm not seeing any aggressive moves. It just feels like people are starting to become a little complacent. Sorry, I have a tickle in my throat. All these kind of set up the same way, as you can see with the E-mini S&Ps. These chart setups, again, today looking very similar as the overall markets are trading lockstep. You can see with the overnight inventory, pretty flat on the day. And we got all of the market moves, basically the full range of the day traded in basically the last hour off of some of the economic data we've gotten, and that range is very tight. So everybody kind of waiting, it seems like. It feels like everybody's kind of doing what I'm doing, has their market assumptions, but aren't putting a whole lot of money in behind that and kind of waiting to see how this all plays out. Having said that, let's get on to the trades that I've been doing and actually peeling off. Remember, I added a bunch because, I felt like the market was ready to pop, which it did. But I added the SBUX to my portfolio just to give me some negative deltas because I was getting very overlong delta in my portfolio. So this was one of those short delta adjustments. And I went in and did the January, and I sold the 65 calls in there for 72 cents. Bought them back this morning. Remember, I talked past couple of days that I was squeezing this out for a little bit more. As a matter of fact, I talked about that on Friday, that I was going to wait for some of that volatility to come out after the weekend. And that's what's happened. So it's, it saved me about 25 cents. No, not 25 cents, maybe 15 to 20 cents by holding that over the weekend. And so I sold those for 72 cents, bought them back for 25 cents. A little bit better than 50% of my max profit yesterday. They were trading around 35.40. So that worked out quite nicely for me today. Still, the only thing I really have left in my portfolio is this GDX. I am looking to add some. I've been peeling through the stocks the last couple of days constantly, trying to find something good. There's nothing really, because as you can see here, even with Starbucks, right around the corner next month, as a matter of fact, next week, we really start getting into, I think there's like 10 good stocks to trade next week for earnings, and then really a landslide of earnings for the next month. So it's hard to put on these high volatility strategies in that month with earnings because we expect volatility to expand. We don't want that. And it's really hard right now with only about, 10 days to go in the 9 days to go in the January contracts to really get any premium, especially with the moves that we've been seeing on a daily basis, to be able to capture enough premium to make that risk worth it. Just not really seeing it right now. So with no sign of the market really settling down within the next week or so, I'm going to stay away from that for now. All right. That's all I got for you guys. Thursday, tomorrow, we're going to be doing a great webinar. We're entering the high volatility strategies, the ones that are really perfect for these types of environments that we've been actively trading for a couple of months now. So check that one out. Go to protraderstrategies.com and sign up for those. If you can't take that, take it easy.